Okay, thanks very much, Lucy. Hopefully everybody can hear me. Good afternoon. Welcome everybody to this Accessing Finance event. We've got around an hour today on fundraising at an early stage. It's obviously a huge topic which we could spend days on. So we'll just try and touch on some of the key points and learnings that Ed and I have had over the years. I'm Nick Gregg. I'm Head of Investments at Blenheim Chalcot. For those of you who don't know us, we're a very large venture builder in fintech and digital. We have businesses like ClearScore, Modular, as well as Agilicis, which is obviously working very closely with the state of Guernsey. We incubate new ideas and scale these, so we're different to a venture capitalist. But in my past, I've founded a series of businesses like Milkround Online and an intelligence business called Strategize. So I've seen what it's like at the coal face. So look, there are multiple different approaches you can take as you pursue funding with investors. You could do direct investment from angels or from seed venture capitalists. You could join an incubator or you could join a venture builder like Blenheim Chalcot, where I work. Whichever route all require you to pitch a compelling proposition for funds, whether that's seed stage, but also planning for more money down the line. And I'll spend 10 minutes talking about that particular early stage of investing before handing over to Ed to talk about his experiences as he's grown his ventures. I think we've got some slides up. So if we could pop those up, Katie, that's great. And if you go on to the next one. So before I start talking about lessons, I reflect on a few of the sort of classic mistakes in any startup with some cartoons I Googled yesterday, which do tell actually quite a useful story of some issues people face. So firstly, being precise about what you do. It's very fine to say you are an Uber-like model for Guernsey or wherever, but a lot of entrepreneurs do tend to shift their proposition with fads and not focus well enough for the investors they're targeting. Secondly, you may well have invented a new type of wheel, but is your version really getting market proof? Is anyone actually saying to you that they will pay money for your product? And thirdly, you may well have heard about toxic cap table structures, and the devil is in the detail on funding structures. And this is very much a long haul. So understanding with lawyers that it's not just about the first round of money, but whatever structure you take, you need to look at how that translates into your second or third funding round and how you end up with what stock you end up with at the end of that point in time. So on that note, we'll move on to the next slide, which is really where we're going to split the overview into three different topics. So initial structuring, how you and your team structure your company once you've defined what the initial idea is. The second point, pitch preparation. How do you define or try to come up with the optimal pitch deck, and what do you need to address? And then the third point, we'll talk a little bit about investor targeting. How do you identify the right investors for your business, whether that's equity investors or grants or whatever it might be? Is there any logic to the structures you can put around that? So let's move on to initial structuring. You've got what typically happens is you've got an idea with some friends in a pub or cafe or with some workmates, but now you need to document this. And this is where a lot of founders get it wrong, as they're all mates and we'll all be friendly forever. Ventures are typically started in teams, it's worth saying. So the most common is, as somebody did some research on this, the most common is 2 people starting a company. The next most common is a single founder, and then 3 founders. If you get to 4, you typically face some other challenges that you might want to think about. But the key questions you need to ask at this stage, which is often lost in the excitement of your amazing new idea, is, are you as a team aligned on how long this is going to take? This is a long haul. Are you structuring the shareholding correctly? Have you thought about the fairness of how you're set up for dividing the current equity? Are there structures in place for when founders leave? And in particular there, how does vesting work? If one of you decides, and this happens a lot, if one of you decides that they need a proper salary because they've got a big mortgage, or even where there might be a founder who you decide you want to remove, how do you actually document that so that when and if it becomes an issue, that you can have a simple document you can refer back to that's legally binding? Basics also, like each of the founders' roles, are they defined very precisely? What you find is quite often if you have multiple founders, people tend to focus on what they're most interested in or what they most enjoy. So some of the more boring bits of running a business, and there are lots, tend to be half done or incomplete, and an assumption that somebody else is doing them. I think what an obvious one is the IP assigned to the company. But what's quite often is overlooked is that a lot of early stage businesses will tap people as advisors or mentors, and then is there a way to incentivize them and keep them involved without obviously spending any of your valuable cash? So you may need to give them equity or options, which is linked to very specific deliverables. If you've hired somebody to help with sales, can you incentivize him based with key metrics? So overall, the one thing you need to do is put into place some documentation from the outset that covers you and your co-founders and advisors or consultants you want to bring on board. So you can either go and get a lawyer in place immediately. That will be very expensive, but obviously gives you a sounding board. But also, there are a lot of tools out there now. And if you look at, there are firms like Seed Legals, which is a great start point for a founder service agreement. You can then put in place the proper full shareholders agreement when and if you actually get proper funding. You can also look at things like seedsummit.org, which is a great resource with templates across multiple territories. They may not be specific to Guernsey, but all of these are easily adaptable and very worthwhile looking into. I think the other thing that's always interesting is thinking about how you structure the team from the outset. There's always a temptation to fill your CXO executive positions with founding team members, but this can become a problem as you raise money, as your investors will want to bring in more external expertise in the areas that you don't necessarily have the skills. So don't always feel that there's a need for all the founders to hold all the very senior positions. And down the line, there are often scenarios where the CEO, it's time to move on or move into a different role. And that's not an unusual future transition that makes sense for some companies. So I think all of these are things to think about up front and start sort of preparing that groundwork in advance of moving on to the actual sort of funding and pitch preparation. So if we move on to talking a little bit about the pitch preparation, we've got some basic structures in place now with a founders agreement or similar. That still covers the business and the team. You've probably got a forecast model and probably quite possibly a basic prototype, and you need to go and raise some money. So how do you prepare for your first investor pitches or applications into an accelerator or a venture builder? It's worth saying all investors are different, but the number one thing is showing you have a product addressing a very clear need, and there is some proof that somebody somewhere will actually pay for that and that you think it's a big opportunity. So investors are playing a portfolio game, which is all about having one or two very big successes across their investments that pays for the losses elsewhere. So in terms of the way that we look at new ideas or concepts at Blenheim Chalcot, we have a very simple list of 9 or 10 criteria that we typically use for screening ideas, which are on the right-hand side at a very high level. These include things like, is it a very clear proposition? I think that's a given. You've got to have a very clear definition of what it is you are actually producing or the service that you're creating. and that often is harder than some people think at an early stage. Is there a clear problem addressed? Is there a customer proof that you actually have clients that are willing to pay for that? Even if it's sort of anecdotal quotes, or preferably somebody who stepped up and said, this is something I would definitely pay for, from a third or an arm's length potential customer. Obviously, size of market goes without saying, that has to be large. Unit economics is one that is very important, but actually at an early stage, you're still trying to figure out what are the actual sort of metrics and what are the actual what are the actual data points that you would look at. So having an idea of what the unit economics might be once you've reached some form of sort of stable traction is important, but it's not critical to have those sort of well-defined upfront. Distribution is how do you actually reach the customer? What is your method of doing that? Is it having a bunch of direct sales guys, or can you really scale this through some clever partnerships? Stuck in the middle there, we also have BC Advantage, which is where we're fortunate that we have some strong expertise in fintech. We have 9 portfolio companies, and that helps us. The 19 companies can help early stage businesses to trial their products. They can give them advice. Plus, also it extends our network, so we are able to sort of get into potential partners to help companies. So we use that as our sort of unfair advantage, if you like. I think the rest of them, I mean, management and execution is actually an important point, because I think one of the most important things that is overlooked is that this is about you. In any early stage venture, it's almost as important as the proposition itself. Do you, A, have the stamina to last through the ups and downs that will come? B, can they work with you, and can you work with them as a personality? So I think that's something definitely to put up front in your pitch deck. How did you get here? What was the origin of the idea? How did you validate the model? And anything else that is useful that you think tells your story in a personable and positive way. So you obviously do have to have a financial model with all of this, but at an earlier stage, it is much more about the compelling proposition. So every single entrepreneur that I've ever seen puts in their deck that they will do £27 million by year 3, and every single investor I know believes that's total rubbish. So they'll discount it back in their minds. You obviously have to have a model that explains how the business you think will make money, but I think I wouldn't get too hung up on actually having sort of forecasts that you're completely confident in at that stage, and there's no need to sort of go overboard in terms of the forward forecast being some ridiculous number, because that can often play against you. We'll maybe talk a little bit about some broader metrics in a moment. With early stage companies, you need to think a little bit more about what are the metrics that are going to be relevant for you once you're launched. One other thing that people do get concerned about, and entrepreneurs raise it, and it's valid if you've got something with a particular set of intellectual property, but that's confidentiality, and you can assume that most venture capitalists will not sign an NDA. So that makes the entrepreneur nervous about, do they include detailed financials? Do they include very much detail on their sort of specific IP that they might have created? I think I think the point on this is you don't have to share an enormous amount of information up front in the deck that you would prepare. You can particularly have very high level financials. You can obviously say what the product does without going into the sort of specific USP or IP if you don't want to. And if venture capitalists or investors are willing on the next stage to go into the data room to look around, that's typically the litmus test as to whether they are serious. And at that point, then you can probably feel a little bit more confident about including some more of the sort of secret or confidential information as they progress at that stage of the sort of funding cycle. So I think let's just move on to the investor targeting. I think, one of the things is how do you identify and target the right investors, whether it's a seed stage specialist fund like Passion Capital or Playfair Capital over here in the UK, or are you going after high net worth angels? And most typically, if you're looking at raising a round, you will be looking at building some sort of syndicate. So it'll be a combination typically of maybe a seed VC and also a bunch of individuals. So what do you send? Is it a big pitch deck, or is it just a 2-pager? I think, in terms of reaching out and sending to these guys, there is no hard and fast rule. We receive, and we're not even really a VC, we receive a lot of different decks. Some of them are 2 pages, some of them are kind of 20-page decks. I think there is no right answer to that. As long as you are covering a lot of the most compelling elements, and I think the key message is do that in a concise way, and make sure that the email is very clear on what you are asking and what the product or the solution is, because your VCs will get hundreds and hundreds of these each month, and so actually just making it stand out and be easy to understand is the sort of the first point. Rightly or wrongly, it's also always assumed that investors with a strong network will have an easier time than a brilliant entrepreneur who has the best product but very limited connections. But is that true, or is that just life? What homework or tactics can you do to raise your profile as you prep for the fundraising? Can you get better at networking? There are definitely ways that you can target angel networks. You can use things like Angel List. There are also things like, can you promote your company better through writing Medium posts or anything else to raise your profile? I think there is no silver bullet to this. However, depending on your focus, there are some areas to think about. You can enter competitions. Entering these definitely does help raise your profile. There's often prize monies associated with that, which on occasion are significant for an early stage business. Certain niches. So these days, you've got lots of niche types of investor or VC firms. So applying to VCs, investing only in female founders, or ones particularly focused on deep tech, that puts you in a smaller pool of applicants and gets you the higher chance to be a big cog in a machine. Grants, I think you should all, we've put that at the bottom, but actually you should always include these. There are a lot of money in pots around like Innovate UK, which are based around very specific projects that you are doing. They do have some constraints, but essentially it is free money and is non-dilutive. So well worth looking into those, particularly as there are a lot of new grants that have come out around on the back of COVID impact. I think overall, one thing to do, and this is perhaps very obvious, but often people don't do it, is do your homework. The best entrepreneurs that I've seen often have very big spreadsheet analysis on their target investors. They have, for each of them, they have the investment thesis, the size investment, the sectors they focus on, the returns. They'll look at the patterns of exits. They'll look at the networks of corporates that they hold, and are they relevant to you? And then also the softer aspects. Is there a culture fit with? Is their culture a fit with what you want to do as a founding team? So I think it's maybe obvious, but actually doing the homework on that also sets you up for far more engaging conversations with the VCs. If they think you've done the homework, that's a massive tick. If they think you haven't looked at their portfolio, they will be almost instantly put off. And we have that ourselves when we get contacted. It's also worth noting that there are obviously fads which investors do follow. Right now, remote conferencing is extremely hot. So there was one huge deal last week with Hopin, which is a business that was started a year ago. It's just raised money at a $2 billion valuation. That sort of thing tips over investors into wanting to pour over the space and look for the next one. Similarly with a hot investor, if you get a well-known angel, then you will find it much easier to get the rest. There is definitely a herd mentality, whether that's the right thing or not. I think, what can you do to make sure your pitch is very slick? And I think, look, you have one shot often with your ideal investors. I think common sense is obviously practicing your pitch with colleagues, family, friends. But the other thing to think about is that when you are targeting your VCs, it's obviously, it's quite often it's the case that people get excited about one particular VC, and they just want to get in as soon as possible to see that VC. One lesson is actually practice first with the VCs who you don't like or you don't really want to take money from, so you get all the hard, difficult questions and out on the table, so you have time to prepare proper answers for those before you actually pitch in to the ones that you really want to take money from. I think that one thing we're not touching on here is how you value your company, which could be a long discussion, as there's a million variables to that. But an important part of the funding process, though, is once you've sort of set where your valuation is structuring. So once you have approval from a term sheet from a VC or an investor, how do you actually structure that? At Blenheim Chalcot, we're typically very simple. We only ever do ordinary shares. We think that keeps us honest and aligned. But there are lots of other structures which you can only, in some cases, understand with significant legal help. These are around pref shares or convertible notes, the so-called SAFE agreements, SAFE, or advanced subscription agreements are becoming much more common. Those both allow you to take on money with a price which is then ultimately set in pounds, and that can be appealing. These can, all of these structures can look attractive to you, but if things do go slow, let's say your product takes longer to develop, or customer traction or signing that first distribution agreement takes longer, and you have to go and raise more money in the interim, they can have a significant negative impact. So all of them have their own little wrinkles, but just make sure you understand how they work, and not necessarily for what equity you end up after this round, but you've got to always be thinking, I am going to do 2 or 3 rounds. And so how does this actually impact with any sort of triggers down the line? So if we just sort of, I'll summarize very quickly on those key points, and then we can jump over to Ed to talk about his sort of experience from real life. So I think, look, the summary is fairly straightforward. You initially structure your business correctly, set up your legals, and get a co-founders agreement early on. Preparation, just make sure that you address the key elements in the pitch deck. There are lots of investment criteria lists out there, but for the early stage, investors will focus on, is this a solution that really has a problem? Why is it the best solution to that problem? Make sure that you get some feedback that is saying, yes, this is a genuine pain for me, and I would actually pay cash for it, and not it's just a nice to have. Remember also that this is about you as much as your company. So project your background and personal strengths as founders. As somebody said on the podcast, Venture Capital podcast the other day, this is a deeper relationship in many ways than any kind of marriage, and there will be ups and downs along the route. On investor identification, the obvious things: do your homework, create a proper Excel on your targets. If you can, tap into your contacts and ask for intros. Definitely makes a difference. But also look for niches where you can, so you're sort of in a smaller pool of applicants. And on actual pitching, just make sure you practice first with typically with other investors before you get to the sweet investor that you really want to. And if you're being given term sheets with convertibles or a SAFE, make sure you do understand that you have or get advice on the structures, and just think about the impact under multiple different scenarios, that you're not diluted too much or restricted. Now, I think, don't forget that there is always an element of luck to this. If you happen to be in a hot sector, And that's happened to a lot of companies which have benefited from COVID. They're suddenly in a hot sector, or you get put in touch with an investor at an opportune time. That's all great news. But yeah, a lot of this is where you can make your own luck, and it's often persistence that really is the payoff at the end of the day. So on that note, I know we've got some questions at the moment, but Katie, if we could hand over, Katie and Lisa, if we can hand over to Ed to give some stories of how he's built his various ventures.
That'd be lovely, Ed.
Hello Guernsey, and thanks Nick, thanks Digital Greenhouse. I hope you're enjoying Global Entrepreneurship Enterprise Week. So as Lucy's introduced me, I'm Ed Prow, MD of Potting Shed. Thanks for inviting me to talk, and all of you for coming. I've already spotted 5 schoolmates in the crowd, and that's the nature of the Channel Islands. Can you hear me all okay, by the way? Good. So it's also a great sight to see all of you in person. So, well done, Guernsey. You should be proud of your response during these times. And so whilst I can't be with you, I'm only in Jersey. I can feel the virtual boos coming through the screen. But you'll be pleased to know I am a donkey. And this is just a Trojan horse approach for taking over Jersey. But seriously, though, whilst an Englishman in New York, so to speak, I do consider myself a Channel Islander, and some of the topics we're discussing today, I think I would love to see islanders and our islands working a lot closer together. So why have I been asked to talk at a fundraising event for this week when I'm a humble creative? So there is a chronology to the reason, and I hope to tie it all in and it makes sense. There's 3 milestones, starting with Potting Shed. I think they're going to put some visuals of that. Another business called Tag Team, which we're involved with, and then finally TEKEX. And these milestones should help unravel what I'm going to talk about and why I'm here. So Nick has given you the bit that's far beyond my pay grade, and that's the theory. I would have loved to have met Nick in Blenheim Chalcot 3-4 years ago, because I'm sure the mines and the minefield at which we've navigated would have been a lot easier. So I hope to give you an account of having been in the mines and gone through the fundraising experience, some of the successes and some of the pain points that we experienced. So we're going to start with Potting Shed. So for those of you who may know us, or may not, we are a Guernsey, Jersey-based brand and digital agency producing design work ranging from the animations that you might see here to brands, websites, and printed items for various clients around the world. We've been around for about 11 years and hope the visuals that you're seeing go to show that we love what we do. As I say, we've got lovely staple clients in the Channel Islands and around the world as well. We've got amazing staff, we've got a buoyant lifestyle business that helps many businesses, and being very transparent, we post humble profits year on year, and I would love to think that we are considered a good benchmark in our field. Okay, enough of the self-promotion. So as a board, a few years back, we said, right, we've got this positive, well morally positioned, profitable business. We've got a lot of smart people in the room. Designers and developers every day. So what is our bigger commercial play? And we agreed that sweat equity might be an interesting model. If you're not aware of that phrase, there's a lot of jargon in the fundraising world. Sweat equity is quite simply exchanging your service or your product in exchange for shares or equity in the business. So putting a direct valuation to what you're doing and applying that to the valuation of the shares. So now in business, we obviously like to think that meritocracy is king or queen. But as Nick said, sometimes serendipity plays its role. And this is where I go to the next part of the story, which is Tag Team. And serendipity definitely played its role here. The timing of us making the decision that sweat equity would be an interesting model, we got approached by a couple of individuals. Some of you may have heard the Tag Team story in Guernsey. It's been presented at some events, but it's largely driven by one of my business partners, Jay Alma. And today I'm telling the story mainly for all his hard work on the fundraising journey, but I've also been part of that. We're just going to play about 1.5 minutes of a video to set the scene for Tag Team, and then I'll sort of run through that.
We have designed and built the Tag Team crowd tracking and management solution, especially for the holy pilgrimages of Hajj and Umrah. We have worked closely with the Ministry of Hajj and Umrah, and we are delighted that our proprietary crowd tracking and management system has been tested during Hajj 2019 in the holy site of Mina. Our current solution includes UWB tracking, a pilgrim onboarding application, a Hajj agent and group management application, payment integration, and pilgrim and agent feedback functionality.
So I think we can probably stop that there. Just to set the scene a bit. So Tag Teams there, you've got a bit of a snapshot, is a proprietary hard and software business which helps organise humans at mass crowd events. Most notably in this instance, the Hajj, which is the holy pilgrimage in Saudi Arabia and Mecca. If you're not aware of it, it's one of the biggest events in the world. It's shrouded in tragedy with things like crowd crushes, deaths, and a real poor infrastructure. We don't really see it in Western media. It's a bit of a PR block, but it's really quite a tragic story in some instances. But it's supposed to be one of the most poignant parts of a Muslim's faith. So our technology is essentially a tagged tracking wearable device linked to a deep navigation technical architecture. It allows for immediate response to pinch points and dangerous moments in mass crowds. The device speaks to a command center linking to security guards with smart glasses. We can then move to live security guards on the ground and respond to issues, all while facilitating the ability to immediately communicate with 5.5 million pilgrims and organizing them safely using things like heat mapping, a digital twin, and whatnot. The example being if a security guard spotted a pilgrim on the Hajj, the security guard would go live to the glasses. We could ask for their health data. They could agree to opening the blockchain to show us their health data. We might see that they've got a heart problem. We could drone in a defibrillator, perhaps, as an example. There's many, many other features, but it would take a long while to talk about these benefits. So let's talk about this in regards to fundraising. So in the journey, Jay and the team have managed to line up successfully the Saudi government so that we are, the sole supplier to solve this problem for the government. And what you saw in the video was our successful trial in 2019. Obviously, things have changed a bit for 2020, the biggest event in the world definitely being impacted. So once COVID is out of the way, we will look to roll out and be the solution for 10 years. So in this journey, we had to flip from a bunch of pretentious creatives and tech heads into fundraisers. To keep the project alive and funded. And we've been successful to the tune of close to £2.5 million, including friends and family, which is a phrase you'll no doubt hear, and in larger investment groups. And the project continues on a path of success, and one day we hope to tell a really successful local tech and fundraise story. So why were we successful, having had no fundraise experience? We know design and digital and technology well, and we can tell that story, as Nick said, in a compelling way. But there's a lot of blind spots in our knowledge, 2-3 years ago. But most importantly, over those years, we've learned so many lessons, and actually reading through a lot of Nick's points there they now become quite natural to us as a business. So what I found interesting is there's no manual, there's no silver bullet, there's not even a module in any business studies degree or study that I know that covers fundraising. But however, that world exists. I could talk a lot more about the tag team journey. I'd happily do that offline. But what I find interesting is, why is this not a narrative that's brought to the surface? And that's why I'm so pleased that we're at an event that's happening in the Channel Islands today. So the final piece of the chronology is what I mentioned earlier, which is TEKEX. And so you'll see the homepage of the website here. So having been through that quagmire, the good, the bad, and the ugly of tag team, and tag team is just one example of a few other businesses we've done this with now. And combining that with my potting shed hat, I was meeting a lot of local entrepreneurs with very credible businesses and business plans. And what became apparent was this real lack of understanding and exposure to that fundraising step. Like I say, you don't see it in any business studies manual, so it's not confusing why there wouldn't be understanding or exposure. And they're sort of stuck at this next stage, and they almost became stagnant. Still successful, but stagnant at that next wall to break through. So equally at the other end of my potting shed spectrum, I was meeting a lot of wealthy local individuals and a lot of clients, perhaps in the institutional money space. And what became apparent there was a narrative that there was a real hunger to diversify the portfolio, and with specific interest in local and technology business. And so I conceived TEKEX about a year ago. In essence, whilst I'm not a big fan of the word, it's a network, and with the problem statement of how can we increase local deal flow in the startup scale up space in the Channel Islands. So I pitched out to 8 people, and we went to the pub and we discussed this topic. The next month, 10 people came, and then the following month, 8 people came again. So I thought, right, what's going on? Am I inventing a problem that doesn't exist here? Is there no black hole at all between enterprise and fundraising? So I did what I can do, which is a brand and a simple Squarespace website, and 25 people turned up, and we had 2 speakers. One was a business presenting their sort of Dragon's Den style presentation for money, and the other one was a sort of a thought leadership chat from a venture capitalist chap. And so a year on, we've now got a network of close to 500 people engaged. The events are usually in person. I've been very humbled to being offered corporate service provider support from PwC, OJA, and now Santander, who give us free space and booze and food. But obviously, since COVID, all the events are much like this and are webinars. We've peaked at an audience of 100 in person at OJA. The audience is a mix of tech heads and digital bods, investors, CSPs, just people generally interested in business. So we're online now, and we've got another event coming up on the 3rd of December, and I'd encourage you all to come if you're interested. So TEKEX purpose is simple. It's to raise the conversation of what is traditionally a bit of a closed club, connect businesses with investors, educate, link people to jobs, mentors, and any other business connections. I can proudly say that we've been successful for 5 company fundraisers, including most recently, and behind these walls behind me are 2 fintech businesses. One is a revenue generating company called Bank Clarity, which is at its scale up state. And the second one is a similar team, but is a proper traditional startup piece of fintech, which is really exciting. And before this event, knowing I was speaking, I reached out to the TEKEX network, know I was speaking today, and asked for some opinions about the space, and which again I'll happily discuss in questions. There's some interesting points. You quite often hear quite negative connotations around the space in the Channel Islands, like it's really difficult. There's lots of contrary examples we can talk about. So to conclude, fundraising is by no means easy, but with the likes of sort of Nick and Blenheim Chalcot's theory and being part of a network, you can be in much better shape and ready for it. Please do contact me if you want to be part of the TEKEX network and join the community and attend the events. There's also a massive WhatsApp group. There's 130 in there. And what's interesting about that is you can sort of crowdsource issues, whether it's fundraise or digital or general Channel Island issues, quite quickly, which is quite fun. And fundraising can and does actively happen in the Channel Islands. And whilst it is a nuanced and complex journey, I hope that projects like Nick and TEKEX are beginning to expose the conversation a bit more openly. So thanks very much for coming and listening to me and Nick, and thank you, Digital Greenhouse.
Thank you both. We have a growing number of questions that are coming in on Slido. So we'll kick off with a few from there. If anyone's got any in the room, again, please feel free to pop your hand up as well. If we start with the first one, and I think probably Nick, if we go to you to begin with. So if you're in the first round of funding, how much of your business should you be expecting to be parting with, to be giving away?
Thanks, Lucy. That's a great question. A lot of people always ask. Should you take more funding now with much greater dilution, or take less and prove your model first and get a higher valuation and more funds later? I think that you need to be careful, obviously, not giving up too much too early and ultimately lose control in subsequent rounds. I think there is no hard and fast rule on this, but there was some interesting analysis done by Seed Legals on how much to give away or how much was given away a couple of years ago. So what they found was that typically around 15% of the equity is given away in that first investment round. So what that then means, if you sort of, I guess, if you extrapolated that, is that, on average, you can probably assume that a company will do 3 rounds. After the 3rd round, you'd hope that the company is either profitable or it's right for an exit. So if you are roughly giving away, let's say 15% in each of those rounds, so that's kind of 0.85 to the power of 3, and you probably throw in 10% for options, you as the founder would end up with roughly 50% of those rounds. And the business, in the first round where you're giving away your first 15%, the business is worth roughly 5 times the investment amount as a kind of ballpark. So that's sort of what happened sort of, up until, let's say, a couple of years ago. You have seen more recently, and there is definitely a trend, is that people are raising in those earlier stages kind of 2 to 3% rather than 15%. And the reason for that is that the cost of doing rounds with simple legal docs and other options is much lower now. Plus, also, people are doing what would be called a rolling round, which means that you can take on more money as and when you bump into or find an investor. So rounds can be longer rather than the traditional model of having sort of hard and fast, this is a round, we're doing it by the end of March, and you're either in or not. So roughly, it's a long answer, but I would assume 15% of the ballpark initially. But obviously, you can be more flexible these days on timing.
Super, thank you. Ed, did you want to add anything to that question?
No, I mean, Nick's far more well positioned to answer that technically than I, and I echo what he said.
Excellent. In that case, I'm going to go to the next question to you, Ed, which is a question from the room about the states of Guernsey, or maybe sort of thinking more broadly across the Channel Islands. There's a lot of talk about the states supporting new business and entrepreneurs. Should there be a pot of funds available to support new startups?
I mean, unequivocally, yes. You know, if I go back to the theory behind TEKEX, you know, potting sheds, we love our local clients, and that's probably 2/3 of our bottom line contributing. Now, there is arguably a finite amount of local business for potting shed, and you know, I love living in the Channel Islands. I adore both a lot, and I want my business here in 10, 20 years' time. Now, to do that, I personally think we need to stop talking about diversification and doing something about it, and really engaging and supporting SMEs, and that's just one important aspect of that support. And to me, TEKEX is just my way of giving that audience a bit of exposure and a bit of narrative and a bit of connection, and the ability to access funds. So we do create a buoyant ecosystem for this slightly diverse industry, because you know, I think more energy could be done beyond the private sector to kind of fast track this. Yeah, it's not putting myself on a pedestal, but you know, by doing this, I hope that this industry will grow, and therefore I can have my business here in 10, 20 years' time.
Nick, do you want to add anything with that question?
I think it's it's obviously a hot area for discussion. I'd agree with Ed that it would be great to see a couple of things. I think one obviously, you know, access to some kind of funding would be extremely helpful, and I think the second one, which is maybe sort of an extension to some of the broader discussion we have, is making available things like EIS or SEIS capabilities in Guernsey, which we obviously have in the UK. But I think that combined with some funding would be kind of very helpful, let's say, for the early stage businesses.
Thank you.
Sorry, could I just add something? You know, we have to create the conditions for successful enterprising behaviour, and in the room there, you know, we've got a lovely snapshot of what Guernsey's got to offer. You know, I want the room to be triple that size in a few years' time, and you know, quite rightly, I think with government support, that's only going to enhance that KPI.
Sorry,
Absolutely.
sorry, I'm a founder of a tech company, and just maybe it's a different initiative from the state of Guernsey. So instead of providing funding, it might be quite nice to actually sort of support businesses by helping with accounting, building websites, social media management, because all my time at the moment is absorbed with social relevance. So it'd be nice to actually utilise Guernsey businesses to make sure the business goes with the business and supports that.
Yeah, absolutely. Yeah, and I would just add to that, within those services, we've now we have 45 local businesses in that space who have committed time and support to startups. So if you haven't been to the Startup Hub yet, we would absolutely recommend popping there and taking a look, because a number of larger established businesses have pledged time and support to do things, and you're absolutely right, like those early stage social media setup, logos, branding, websites, some of the nuts and bolts that are really important.
Yeah.
Thank you.
Can I just add something to that as well? One of the things I noticed as well, small businesses struggle to get business, which goes into story, which gives them credibility, that goes further off our shores. And Neil Inder was talking about how could they adjust the procurement process to benefit local businesses. That's something which is typically focused at bigger contracts. And I think it really is something that the States, because it is the biggest employer and client on the island, to be able to, I think, actually just engage with some businesses and product and service providers a little bit more freely. So actually give them those stories, hence the credibility, which then leads to further investment, leads to further clients and further afield. I think that there's a bit really missing about what government can potentially do here beyond provision of service or funds.
Thank you. Okay, I think we've got time just for one or two more questions. Nick, one over to you. If you're at very early stage, so you may not have the metrics when you're putting together those pitch presentations, how can you prove that you have a valuable business model, a valuable service that customers want and it's worth the investment?
I think, look, with earlier stage businesses, it's very hard to demonstrate traction if you particularly haven't launched the product. Obviously, usually, when we're looking at some of our businesses, which is typically slightly later stage, we want to see details on the sales cycle, the win-loss ratio, conversion rates on the pipeline. And that's easy for something like a more established SaaS business or something that's selling hardware. I think just the two things with early stage businesses in terms of how an entrepreneur can present credible evidence or forecasts is one, I think really all you have to do is you need to agree with the investor what type of metrics you will be benchmarking against when the business starts to have traction. I think that's almost all that you can do, is have an open conversation and agree that in a sort of collegiate way. The second thing is within the investment process, which can be 6 weeks to months, just make sure that you are flagging bits of positive news. So whether that's a new feature coming on stream or new customers signing up to the pilot of the product, keep that momentum going or wherever you can, just showing that there are elements that are always improving right the way through the investment process. If there's something that sort of stalls or that sort of news flow slows up over a 6-week period, that can, negatively or put off an investor at the last minute.
Excellent, thank you. And Ed, anything to share on that side of your experience of keeping the investors engaged as you've gone through that early stage?
Yeah, I think I would sort of reference that valuation piece in this answer. So we've got a pre-revenue app that launches in hopefully the next few days, and we managed to win some grant money to get it off the ground. We then exchanged a bit of sweat with a developer to bootstrap it as best we could, and then we started chatting with investors, and we basically applied a Silicon Valley SaaS valuation model to our app, and we came up with a valuation of £1 million. Nice round figure, but we have to start somewhere with chats with an investor. Now, the first investor, much like Nick said, came back and said, "Well, I've launched a similar app in your space that was had clients and was actually generating revenue, and I valued that at £1 million as well. And you've got neither of those things." But we had some good news to feedback, and that was that we had 2 global corporate service providers signed up to be using our app. And just as Nick said, I think those stories are not just important to be continuing that narrative with your investor network, but they are contributing to your valuation. Okay, it might not be £1 million, but straight away there was value there. So again, the good news stories, but also constantly thinking about every action and every time that's put into the business, how that relates to the value of the business, and it's think about what you're doing to increase that value at all points.
Fantastic, thank you. I think we've just got time for one more. We've spoken an awful lot about what the people in this room should be doing in terms of being ready to be prepared to talk to investors, to engage with investors. But maybe just touching just finally on just that little flip side of if you're approached by someone and they say, actually, yeah, I really want to invest in your business, or someone contacts you or whatever might happen, what sort of due diligence should people undertake on potential investors? I mean, Nick, you spoke earlier, just touched on IP and things like NDAs, but what sort of diligence should people be looking to do if they are approached by people looking to invest in their businesses?
I think if I can, I'll just answer and then Ed can chip in. I think it's quite straightforward. I mean, look, what you're really doing is you're looking at, there's some basic homework that you can do, which is looking at have they followed on with those investments. So, straight, the numbers will speak for themselves, because you want a party that is going to be with you for the long journey. Secondly, obviously, can they, and this is where you would have to look at who the co-investors were in the next round. So do you think they are credible for introducing you to other investors in their network, for the next round? So those are kind of two first points. I think the third point would be, is you have to go and speak to the CEOs of some of the businesses they've invested in and see what they say about the individuals, how they've behaved in the sort of good and the bad scenarios. I would also try and speak to some of the CEOs of businesses that they have exited, because once they're free of the shackles, if you like, of that investor, they'll maybe be a little bit more open about what they were like. I think those are the main things. I mean, it's really just getting a feel for whether you can work with them and whether they will add value in the next round. The reality is that most VCs are all quite similar. All their websites say exactly the same thing. They'll tell the same story. And in many ways, it comes down to the personality of the individual who you're getting into bed with. Ed, do you want to talk about that?
Yeah, I mean, I would again echo that, and I wish that I had known you 2.5 years ago, because certainly we learned the hard way with Tag Team, and one of the issues was due diligence in the US. The proximity presented an issue. We couldn't always be popping over there to have regular meetings and meeting these people face to face all the time, and we did get burned once. So, I mean, interestingly, with fundraising in business, one hopes that you apply due diligence principles to any transaction you're undertaking. And so clearly there's nuances with the fundraising, but I would apply the same amount of diligence that you would to business practices. And another thing, one of Guernsey and Jersey's advantages is this geographic proximity. I believe there is a far more a better sense of accountability if you're speaking to local investors, certainly. And some investors will really want to be hidden and confidential, and you have to honour that privacy as well. And some, are willing to sort of put themselves to the press and show that they've invested in you, which is great as well. But yeah, I think just the technical aspects of DD you understand far better, far versed than I would. I would just say apply the same business principles in due diligence.
Excellent, thank you. Okay, we are sort of at time now, so we're going to draw the session to a close. Some really interesting information today around structuring pitch presentation, investor engagement. There was a question that did pop up on Slido about how do I find out more, how do I get involved in networks, is there a list of people to contact, etc. We've got a couple of really exciting initiatives that we are doing with Nick and with Blenheim Chalcot at the moment. So if you're not aware of those yet, on the Digital Greenhouse website, if you click through to Smart Guernsey, you'll find information about mentoring programs with Blenheim Chalcot, other events and activities that are going on where we're bringing experts in, particularly in this space, in this area. Ed, I don't have the date for the next TEKEX event. I was having a quick look on my phone, but I can't find it. Have you got it to hand?
3rd
Do you know when your next?
I have put my email in the chat, so please email me. And if you want to, so basically, if you email and you're interested, we can have a chat about anything specific, or simply if you want to become part of the network, and if you want to be on the email and the WhatsApp group, let's need your mobile number.
That'd be wonderful. What we'll do, anyone that's not gone through Eventbrite to get a ticket for today, if you could just let Ben or Rebecca know on your way out, we will send the recording, a link to the recording of today's event, contact details, and a couple of other links out to some of the things that might be of interest to you in the space following up. So thank you very much. Thank you, Nick. Thank you, Ed. Thank you, Katie, who's quietly been in the background organising all of the slides and links through. And thank you to everyone who's come today. Thank you.